Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, October 12th. It is 5:50 as I'm starting the video. And as always, please run your player at 1.25x. I think that'll work out great for you. Taking a quick look at futures. When I got up this morning, they were down pretty significantly. And now they have rallied back to almost flatline, maybe even a little bit green compared to yesterday's close. So remember, in those instances, if you're going to be actively trading, always mark that pre-market low, whether it be in ES or SPY or any of the names that you may be trading, because a lot of times what you'll find out is that price will revisit the pre-market low as a back test before moving higher. And in this case, it's a good amount down there. So pay attention to that, since we've seen some pretty nasty fades over the last few sessions. It wouldn't surprise me at all if they just gunned it from the open down to those pre-market lows and then reversed it, or even keep going farther south. We don't know, but it's a good idea to mark the pre-market low and the pre-market high if you're going to be actively trading those names. So taking a quick look at macro, we've got the NFIB Optimism Index, we got Red Book and Jolts in the morning. And we've got a 10-year bond auction at 1 o'clock. So you may want to put a star by that one and just kind of watch rates and TLT at 1 o'clock. And you should be able to tell right away if it was meaningful or not. If it goes off without a hitch, then interest rates will more or less stay the same. If there's a problem, then you may see interest rates pop up. On the earnings front, this morning before the bell, we've got Fastenal, FAST, industrial supplier name. And then tomorrow, the earnings season kicks off in earnest with JPM, BlackRock, and Delta Airlines. And then Thursday on out, it'll just pick up more and more and more. So be aware of that. We're going to start out with some, big banks, as we always do. And so we'll see how it goes. So, one last other production note that I want to make you aware of. I think what I'm going to start doing for the sake of time is sending out trade ideas separate from the morning note. And that way, I think it'll be a little bit easier for both of us to organize that. If I, send you a chart list or make a blog post with 4 or 5 charts and names, I can do that separately. And then you can find them easily if you want to go back and reference them, or if you want to file them away in your own directory, then you can do that. So I'm gonna start splitting those. So SPY 2 hour. I mean, we had the nice opening. Power candle came right up to touch the bottom of the gap and then rolled over. Remember, the gold EMA is the 50-day on the daily chart. Came right below that and then lost this key 436 area. Now it's in the pre-market, we're just below 436. So I think 436 is going to be a good pivot for us today. Above, I think you can be long. Below, I think you can be short, because you're back in this big trading range. So even if you wanted to hold off, I don't see any problem waiting till price is above the 50-day, right? And then you can use that level to shoot against going higher if you're a little wary of getting long while price is below the 50. Then you just make that make the 50-year line in the sand, and then you can use that as a toggle point or a pivot point going forward. Here it is on the 30-minute chart, just a little bit more blown up for you. We've got the gap resistance right here where it stopped, and then we've got 436, and then you can see the multiple targets below if they want to keep selling this thing off for a potential revisit of the lows down here at 427. So I think we've got to keep a real open mind here because, well, price action has told us the faders or the bears are in control. Why? Well, we got a series of lower highs and we've got a series of lower lows. So we're still in a corrective phase. Now, if we were to, rally and start coming up here, then we'd have higher lows, and then we can put in a higher high up here and start making that turn. But until price can, get back above the 50 and start making some progress heading north, we have to be pretty skeptical of the rallies. So here's the QQQ 2 hour, and you can see in this chart, whereas on SPY we had broke above the 50, and then when they faded it, we came back down through. On the Q's bounce, we didn't even get close. We, opened just below 360 and then rallied up to 364, and price didn't like that, and it just reversed and gave up the whole thing and then went down even a little bit lower. So the Qs are definitely underperforming SPY at the moment. So and we've been talking about that for weeks with the rising rate environment. If you're looking at the Qs, it's all going to be driven by the FATMAAN names. So we're going to look at those in a minute. But as far as trading this today, I think you still key off of 360. If we open down below, then recapture 360, I think you get long there. And then you see if price can take out 364, then you've got a lot of resistance coming into play at around 366 with the gap open, the 50-day coming in, and downtrend resistance. So that's going to be a really important important trade location. And here it is on the 30-minute chart. You can see that this big volume over price bar coming in at 360 makes that your pivot on shorter time frames. Oh man, IWM. Really, the market behaved the same across the board. I've been looking for IWM to outperform. Looked great for the morning session. Came right up to our level here at 223.75, and then just let go and almost came down here to fill that gap. Might be good enough for government work. Sometimes you see that. I think we're just a few pennies shy of that fill. So today, if price can come up and recapture the 50 and recapture that pivot at 221.50, then you can be a buyer there and see if you don't get the breakout from 223.50 and then right on up. But if the thing starts falling apart, you've got a level here at 219, and then your next level's 217, and then 214. So this can certainly move to the downside if they want to keep selling it. And here's just a little more detail for you on that, with the levels clearly defined if you want to actively trade it. Right here at this juncture, I want to welcome any new visitors to the YouTube channel. I really appreciate it. I'd like to think that if you incorporate this note in your pre-market planning, you'll have a much better chance of not only seeing the trade, but taking the trade. If you build up a little confidence in my levels, and I think it's something that I do really well, identify those objective levels, giving you nice pivot points to trade off of, you can incorporate that into your pre-market routine and then develop your trade plan. I think good things will come in your trading. So hit the subscribe button and the alarm bell. Jump over in the show notes. You'll find a link to the blog site where you can drop in your email. Takes 10 seconds. Then you'll get everything I do sent right to your email box. You won't have to go hunting for it. And you'll also get an invite to our trading room. And of course, longtime listeners, I really appreciate your support, and for you retweeting the content and passing it along to others in your trading circle. Really appreciate that. So Facebook, still under pressure. If you've been observing closely, I revised this trend line. Why? Because I found a place where I could get a lot of touches. So you can see, going back up to the top here, a lot of places where this downtrend resistance has stopped price. So I tweaked it a little bit. Be aware of that. Really, the line in the sand is this 322.50 area. If you'll remember, see if I can grab it here real quick. We're sitting right on the 200, and that's a critical trade location. If you lose the 200, or it loses the 200, I think you can be bearish on the name as long as it stays below the 200. It's certainly got an open path down to 300. So if things start getting really squirrely, that's going to be a very objective trade for you on Facebook. And then you can set your stop just above the 200, say at, even if you gave yourself $5, I mean, the risk reward is still there. You got $25 of potential downside with not a lot of support in the way. So you could set that stop according to either your risk tolerance or the target that you're shooting for. Just make sure it's a good rule of thumb is at least 3-to-1. If you can get 4-to-1, all the better. Apple, same modus operandi. Came right up here, hit the bottom of this gap, and then rolled over. I think you're good to go on using 143 as your pivot, and then look for a breakout above 144, and then into the gap right on up. On the downside, a break below 143, rolls it back over to 140, 150, and then potentially on down to test these prior lows. Tesla doing good. I mean, I know it's been frustrating if you've been trying to trade this, and it always is when you're in a consolidation trading range with a $800 stock. This is this is tough going, but just from a technical standpoint, it broke above 790, and we've got a prior high at 805. So if you either are long or want to get long, you can use 790 as your pivot and get long against it. Or, like we discussed yesterday, you can just set your alarm at 805 and wait for that breakout and then get long. So all depends on how you want to play it. But Tesla is continuing to get a good deal of call flow action in the options market. So from that standpoint and from the chart standpoint, I mean, we've gone from lower left to upper right, and you can't ask for much more, especially given a lot of other tech names have been hit pretty hard. Microsoft took a little peek into the gap, rolled back over, sets up really well on a pivot here at 294.50. So below, you can be bearish and look for 291. As long as it holds, you got this gap to fill up to 299. So we are very much right at a pivot point on the chart, and you can see this big value area that volume over price has built out, where a lot of trading has taken place, where we're smack dab in the middle of this big range as well. So whatever way it breaks, I wouldn't hesitate to go with the flow, because I could easily see this thing going higher or lower with the rest of the market if in fact the market does get a little panicky. Oh, and one thing I forgot to mention, don't forget October option expiration is Friday. And I remind you because you may have options expiring Friday, in which case you want to keep a close eye on them, because time decay is really going to kick in. But also, options expiration week is usually bullish. So, we didn't see that yesterday, and it doesn't always hold, but usually there's a pretty good push into options expiration. So I'm hoping that over the next balance of the week that we can get that push. So anyways, Amazon here, pretty weak. I mean, it didn't even really bounce and came back down below this 3260 area. I think you can use that. I've got it marked here at about 3255, right in that area. I think you can use that as a pivot point, and then you've got the 200 here at approximately 3290. So price is already below the 200 on Amazon, and that's it's on the wrong side of the chart. You can use that 200 as more or less defining a bull and a bear market. If you're above the 200, you're in an uptrend. If you drop back below the 200, you're in a pretty good downtrend. So if you want to be bullish for the longer term, you can wait for that 200 to be recaptured, and that'll move as time goes along, of course, as there's more trading history. But for right now, if you want to actively trade it, I think 32.55 is your pivot. And keep in mind where these prior lows are. 31.80 would be a place where if it did come down, you certainly want to have that hold, because if that breaks, that's going to bring in even more sellers. So make sure you have that line clearly drawn on your chart. Google came up here and found resistance back here. You see that support, 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 support. Now that's resistance. So there are reasons why price, stops in the middle of a gap. It remembered these price locations, and so yes, you expect a gap fill, but you got to be aware of any resistance that may be in the way of that when you're trading. And so it was rejected there and came on back. Now we've got a gap below to fill, and I think this level here, 27.50, if price came down to 27.50 to fill this gap, if you had gotten short right here and caught the gap fill, that would be a place where I would reverse it, because I think 27.50 is a great place to try a long, and you'll have to use a little judgment there because of market conditions. I mean, if the whole market is falling apart, I mean, Google may move through this 27.50 level, right? So everything is within context of what you're seeing everywhere else. And if you see all the other FATMAAN names, just, red bars all over the place, just because this comes into a pivot point doesn't mean, it's going to bounce and head north. If everything else on your screen is going lower, then you just stay in your trade, and then you trail your stop down as you move lower, so that when that inevitable bounce comes, you are stopped out relatively quickly and be able to capture most of the gains. Netflix, soggy day, but still looks great. Why? Impulsive move higher, still in the consolidation flag, and now with price right at the bottom of the flag at 627, 627.50, I think you can be long against the bottom of the flag at that level, 627.50. But if price falls apart and you lose that level, you're probably coming back to 615, and then that would look like a breakout and a back test of the breakout. Happens all the time. So I know it would be frustrating if you were, positioned for a long trade, but just keep in mind that I think a break below 627.50 with a market going down, you might have yourself a nice little trade back to 615 if that's something you want to try and you're nimble, etc., etc. But as it stands now, it looks bullish. Semiconductors, same type pattern. Came up here, got close to 258, and then rolled over. That was our primary breakout line. That's why I've got it a little bit bolder, hopefully showing a little more importance there. But now it rolled over to this 254 level. I think that's your active pivot for this morning. Man, excuse me. Anyways, use 254 as your pivot with a target above back up to 258 and a target below down to 251. And this can be a nice one to trade because, you know, you've got targets relatively far away. So, you know, once you get that reversal point, there's good reward potential because, you know, those support and resistance levels are still pretty far away from your active pivot. So let's wait and see. Price could come down here, retest that low, put in a divergent low where you got PPO and RSI at a certain level here, and then you come down here and you can see that if we were at a level here at this low, and now we're way up here on PPO, what you could see is this thing dip down a little bit, but then start to curl up on a bounce, and then you'd have a double bottom, but with big bullish divergence. And that's usually a money trade. So you may want to take a note about that or file it away in your memory that that would be a good double bottom low place to try a long. So let's wrap it up there. Little quicker video this morning. I'm happy to talk for longer periods of time, but I know a lot of you are on busy schedules, and so I'm going to try to be a little bit more snappy on the videos, move through the content a little quicker, and then I can add supplemental ones throughout the day, whether it's on trade ideas or market observations, and then you'll have more bite-sized pieces of content to look at rather than some big, monstrous, long video. So, thoughts for today. Number one, big overnight dip where they rallied back. Mark yesterday's close, mark the pre-market low, and then work from there, keeping in the back of your mind that we've had at least two bad fades the last couple of trading sessions, you know, where we look good in the morning and they roll it over in the afternoon. So, you know, under that scenario, where they're selling the rips instead of buying the dips, so complete opposite, I wouldn't be surprised if they come back in the regular session to hit that pre-market low, even just for a technical back test. So be psychologically ready for that. And watch that 10-year bond auction today. Remember, rising rates, harder for tech, harder for bubble names. If for some reason rates drop dramatically, you'd see a big boost in ARK and mega cap tech, and tech in general. So let's watch and see how that 10-year goes off at 1 o'clock. Okay, let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a good trading day and talk to you next time.